the first question that we should ask is, do you believe, or to what degree do you believe that AI will be transformative? And if you're in the camp that this is going to be something that comes close, meets, or exceeds the hype, then Microsoft is going to go up. There's no doubt about it. I think there are better places to invest related to AI, which just given their pole position may seem a little bit out of touch. But the simple reason is that Microsoft doesn't have full control of their AI destiny, is that they, of course, work closely with OpenAI, but their ownership is not an equity ownership. It's related to revenue. So OpenAI can do things like do a deal with Apple. And ultimately, Microsoft has worked is building more of these small language models to try to diversify. And so I think that they will clearly benefit, but we think that the best positioned company, despite the news yesterday around Search GPT, is Google. And just to put that into the contrast to Microsoft, is Google, they own their foundation large language model, they have advanced silicon, and they have distribution of 6 products that have 1 billion or more daily active users. And those are 3 things that Microsoft can only claim 2 of.
Gene, there's so much of this that's hope and a prayer and a promise when it comes to AI. So picking up on what you said and Tom's good counsel that we should look forward, let me look back only briefly to say, what can we take away from what we heard from Google, from Alphabet this week, and layer that onto what we're going to hear next week from these other companies? I hear what you're saying about Microsoft and the way that they're approaching AI, but is there the potential that this is perhaps a savvy move, and that, if this doesn't pan out to be as transformative, as widely transformative as many people think, not being all in on it might in fact be a good thing going forward?
Well, I think it would be a historical mistake if they're not in. That's my opinion. But let's take the approach that they're spending a lot of money, and it may be not money well spent. So just quickly to kind of frame that in, is that these companies are spending about $50 billion a year on CapEx. So you figure over a 3-year period, $150 billion. They're generating about $100 billion a year in income. Of that CapEx, by the way, about half of it is related to AI. So said another way, $75 billion over 3 years. Their market caps are $2+ trillion. And as Zuckerberg said this week in his Bloomberg podcast, that there's just too much risk if they don't pursue this, because it is the biggest change, as he talked about, in the next 10 to 15 years. I think it's the biggest change in the next 50. But the point is that I think that if one of these companies takes the approach of let's save $10 billion here or $10 billion there over a year period, I think it could be just a historic mistake. And so they get it. Google said it. Sundar said on their call that they have to continue to embrace CapEx, and ultimately, Dave, that's the central question about AI investors should focus in on, at least over the next year or 2 years, is what does that CapEx pace look like?